Okay, welcome everyone back on the Financial Fox Smart Investing with Clem Chambers and Zak Mir. How are you doing?
Well, I'm
very well. As usual, I don't have much time because I'm a very busy CEO, unlike Clem, obviously.
I'm only the CEO of one public company now.
Yeah, well, yeah, there we are.
Okay, I think we were having some...
Zak is the new CEO, so he needs some coaching from someone who's been a CEO for 30 years. The thing is,
yes,
Zak, you have to organize your company so that you don't have to do anything. And when you get there, your company's running well. If you keep having to fix things and come up with new ideas, your company's broken. So you have to unbreak it because you have to push the authority and the work and the ideas down. So when you get to do it right, you go, oh, what am I going to do next? Because everything's going well, you see, and then you've got time to yourself and you come on Stefi's show.
Okay.
Well, on that note, I've got about 5 minutes, but I see what you're saying. It's a wonderful tutoring course you're giving me.
My invoice is in the post.
I think let's start with something. We were just having a chat before we went live about which are the professionals that die earliest, and you mentioned about
that sounds a bit morbid. That sounds a bit morbid.
I know, but that is going to link back.
But the idea was, I was asking Stefi's fashion advice on what glasses should I wear. Should I wear my Elton Johns? Should I wear my sort of Last Good Fridays, or should I wear my Laurence Olivier dentist marathon man? Is it safe? Is it safe? And she said, oh, dentist, yeah. I'm Jack said dentist. Well, they're all leaving the profession. And I said, well, you know that dentists only live to 57. Life expectancy of a dentist is very, very low, or it was 10, 15 years ago when I saw the actuarial tables. So the stress and maybe the working with bacteria and people with all sorts of funny things going on is what kills them. But it's 57, or was 10, 15 years ago, and there's only one more profession that's more dangerous for the health of the practitioner, and that is, it's not mind clearer, but it's actually pathologists. Pathologists, when I saw this list probably 20 years ago, 47 years old. They don't make it to 50 in that profession on average. So that's kind of interesting.
Yes, no, I think it's dentists leaving the NHS, which is the real issue. But I mean, who would want to work for the NHS?
They're also leaving the planet as well.
Yes. That's,
I just think that we are talking basically about stress that is getting people to die earliest. But we are in the most stressful time for the market right now. So that's why I was seeing some kind of connection. We don't want to die too young, right? We still want to make money. But it seems like this stress is
well, the Japanese army had a great idea about that. So obviously you don't want to teach your young men to fear death. So they said, you're like the cherry blossom. You live a very beautiful life, and it's a short one and glorious. So off you go, machine guns that way. So, but the profession that appears to be the one that you live longest is fine art painter. Painters, they live a long, long time. And someone like Solange,
Churchill was a painter, wasn't he?
Yes, he was a painter. He was taught by Walter Sickert, who was accused of being Jack the Ripper.
Yes, unfortunately, Boris Johnson tries to do a bit of painting as well, but it looks like he paints with his feet. So I'm not quite sure whether that's in the same.
That's what they say about all great artists when in their lifetime, So maybe he is Boris. Boris is the great artist.
Well, he is certainly an artist in terms of his way of twisting reality. It's fantastic.
Well,
he's the psychopath.
He's brilliant at that.
But I think, painters, but also housewife, people, they have yoga teacher. I should be a yoga teacher.
Well, that's interesting, isn't it? All those get fit people, they don't necessarily live that long, which I think is kind of ironic.
Well, the yoga teachers.
Well, do you know any yoga teachers that live to 100? I've never heard.
In India.
I've never heard. Well, no. You don't hear of all these get fit get healthy, do exercise people, eat properly people. They don't say, well, there's all these eat properly people. They live to 105. They don't. Yeah. They just live as long as everybody else.
I was actually reading about a lady, I think it was in a third world country, I don't remember where. She was basically, her diet was focused on milk, and she was like over 100.
Yeah, well, they probably don't have good records there.
Yeah.
That's the trouble with all these other places far away. When you ask them for their birth certificate, they go, oh, don't have one of them. Well, when was you born? Oh, a long time ago. Well, when exactly? Oh, well, Emperor Nero was on the throne. I don't think that's highly likely. So normally the interesting thing about longevity is that it's coming down. The actual longevity of the extreme old is coming down. It used to be 120, 125. It's now around 115. So there's about 5 to 10 years have been cut off the longevity scale, which is, no one's explained that or even brought it up. If you look at, for the oldest people in the world now, they are now about 5 to 10 years younger than the oldest people in the world were when I was young.
Yes, it's all very dodgy, isn't it?
Well, yeah. Who knows? What's going on there? Maybe
stress, Clem. Is the stress? Is exactly what you said. It's exactly where we are. It's not that.
It's just it's like a father-son or the mother-daughter. So I'm born in '66, and then my son will die in 2100. So that he will be 134. I mean, it's that kind of thing. That's what happened before.
But the extreme end is coming in. The average was going up, but the extreme end has come in over the last 30 years. But when it comes to stress, it's not all. If you create your own stress, you live longer. If you are forced by stress that's given to you by other people, you die younger. So it depends where the stress is coming from. So that's why a lot of people who are in business live longer than those that don't.
But also I kind of agree with you on the point. You see all these people doing like all this exhausting training to stay fit and stuff like that. They are not the one, they are living longer. So too much exercise is not good. Too much diet restriction is not good. You have to kind of like be a little bit softer.
I'm glad to be on this health and fitness show for the first time. But I think if we're going to talk about stress, we want to talk about the markets. Because boy, are they stressful right now.
Yeah. So okay, let's start here. How stressful we are in the like we are, I don't know, 10, we are 8, we should expect more stress. Where we are with
Well, you can't really get in a more stressful position in markets. Well, you can just a little bit more because the markets are crashing. The markets have crashed in America. I think the S&P has actually crashed in terms of it's down 25%. And a crash is a fall of 25%. It doesn't have to be in a day. It can be over a reasonable period. And it's already in that zone now of crash. And it's no sign of that it's going to turn around or it's got near a bottom. Crypto has crashed and is still in the middle of a crash. So really, if you're long, you can't really be more stressful than that. Not only is it stress, but there's also pain because you're losing money.
So are we waiting for the Fed to blink? Is that our sort of?
Fed's not going to blink. Fed's not going to be. It's got a plan.
So they'll just let everything crash in the way that they managed to stop in 2008 and 2000. They'll let it go.
No, 3,500 on the S&P, and then they're stabilizing. Because the way they're taking money supply out of the system is to let the market go down and destroy the wealth of capital tied up in that. It's already down about $10 trillion of wealth. So there's most of what they pumped into the market right there. So, it's not, I think the mistake that people make is they think the people in charge are incompetent. Now, if it's politicians, they're probably very right. But people like central bankers, they're technicians. And they've got an army of very, very, very clever people behind them. And they know what's going on, and they know what the risks are, and they know what they've got to try to do, and they pretty have a good idea of how they're going to do it. And they've got to drive the excess money out of the system without killing the economy.
And they have already and they're going to kill the economy, aren't they?
Well, no, because we're getting to the point because they can put liquidity in when they need to. When things start to look like they're going to fall down rather than slim down, they can put money in, like they did just last night. When the Fed notes came out, the market missed the market. People like me and you went, "Oh, that's no big deal." And then suddenly somebody magical came out and it went, floated up. Blah, 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 blah. Team BlackRock, as I call them, But, you know, they pulled a lever at the Fed, which pumped money into equities to push it up, to send a signal that they're not going to let it collapse, utterly collapse, but they are going to let it correct. And the correction, I think, is 3,500 on the S&P. So that's a little way down from here. In fact, I want to pull up the chart to see exactly where we are, because I'm not following it dreadfully closely, because I know which way it's going. It's going down. My only worry is to make sure that what I've got does not get crushed by that fall. And so far, fingers crossed, I've been doing great, because I've got gold and I've got commodities and food commodities and really, really, really cheap big companies. And that's riding this very bumpy road. It's riding through it okay for now. I mean, I'm sure I'm going to lose a packet of money when it actually does the final leg down. See, it's 4,000 on the S&P 500. There's another 10, 11% to go, I think. Unless they lose control. If they lost control, it's gonna, you know, who knows? These things can go down a lot, because the valuations are insane. Absolutely.
So what that will mean from a stock perspective? So are stock going to go down 11% as well, or?
Oh, that's, yeah, S&P is the index of big American stocks, the top 500 companies in the US.
What about the UK?
Well, in UK it's very interesting, because UK has not gone up ever. So the American market's gone through the roof, and if it came down to the level of the FTSE, it would be Armageddon. I mean, the FTSE has not gone anywhere. Pull up the chart, I'll show you.
Are you putting up the chart?
No, you're putting up the chart. My screen's all strange size and shape and top secret.
Let me just look, top secret, Clem. We can't share too many secrets here, but.
Pictures of all my Thai girlfriends for a start.
Okay, here we are.
Right, so go to charts.
Oh, sorry.
You see how easy it is to do that. Go to charts.
Exactly. Where I was looking at crypto.
You are. Top woman in crypto, I see. Charts. Click on charts at the top of the screen. There we are. So type in there where it says AFN. Get rid of all that. Type SP 500. And now where it says overlays, scroll down a bit. Where it says overlays, type UKX. Now, so that's the difference between the S&P 500 and the FTSE 100. Now, if you go and you click on, say, where it says Jan 20, right a bit, down a bit, there. Now stretch it the other way, a bit more. That's up. Get back the other way until you get the top. Oh, that'll do. You see how at one stage how big the difference is between the performance S&P 500 and the UKX, and you can see it's coming down in line.
But it's funny because the UK index is actually quite stable.
Well, if you stretch it a little bit to the left, like you just did, but a little bit down a bit, down there, left. Yeah, there you go. More, bit more. Stop. Right. So you see the top of that hill. Go back so you can see the top of that hill. Stretch it to the right a bit, like you just did. Down a bit. There you go. Down there. No, other way. The other right. There you go. Yeah, that's the COVID crash. So the UKX is almost back to the high before COVID, and you can see the S&P went crazy up, and it's well above the high pre-COVID. But if you want to see more, so you can see that S&P went up a lot. Now it's coming back down. It's going to get pretty close to where the FTSE is now, 3,500. Now if you go right again, go right with that. Yeah, right. More. Oh, that'll do. Stop. Right.
But that's similar.
Yeah, but the difference is one's gone up no percent and the other one's got doubled. Yeah, the S&P has gone from the equivalent of 1,000 to 4,000, and the FTSE's gone nowhere.
Do you see a scenario, Clem, where the UK can beat The S&P? No. Would you ever see something
Well,
like
I mean, it depends what you mean by beat. If you mean, can the FTSE stay where it is and the S&P come down? So can it outperform? Yes. Would it ever? Well, I mean, you can see, look, from 2012, they were both at a level equivalent of 1,200.
Yeah.
And it's now gone up 4 times. S&P's gone up 400%.
But that's all the tech. That's all.
No, it's it's the S&P 500. It's the top 500 American companies.
But they are mainly.
It's like the FTSE 100, but with
But
many more.
They are mainly tech companies.
Yeah, but no, not really. Now, if you want tech companies, put under UKX, where you put UKX, COMPX, COMPX. Right, so leave that for a bit. Yeah, there you go. Okay. Yeah, and so you see how much the tech company's gone up.
Yeah, that's
even more. Yeah. Now, if you know, go back to where it says July 19. Yeah, and now stretch it to the right. Yeah, keep going. Go back to 2012, like you just did. Keep going. Go. 2012. Go. More. Stop. That loop. So the blue is the FTSE 100, and the green is the Nasdaq, is the tech stocks. So the tech stocks have gone up, 5-6 times. Go back to 2012. You're on 2013. Go back even more. Yeah, there you go. Go to you see 212. There you go. That loop. Yeah. So you can see the massive overperformance of the American market in comparison with the UK. The UK price is actually below where it was in 2012. By the looks of it, I haven't got the exact line to check that. But you see, it's gone nowhere. Whereas the American markets have gone up hugely. So the idea is, in fact, I think you've stretched that. Go and click on the yellow, and then pull it. Oh, yeah, in the middle, maybe. In the middle. Up. Go up. Yeah, now do it. Yeah, go. Yeah, stop. Okay, stop. Now go and stretch that to 2012 again. Yeah. Stop. Right, there you go. So the FTSE's gone nowhere in that 10 years, and the S&P, the whole American market has gone up 4 times, give or take, and the Nasdaq has gone up 5, 6, 7 times.
Wow.
And if you pull that now back, go to 2012 again, down a bit, down. There you go, and now move it back to 2008. A bit more, 2006 maybe. Yeah, there you go. That'll do. So you can see the base of the credit crisis.
Yeah.
And so before the credit crisis, FTSE was about the same now as it was before the credit crisis. And look at the difference in the American market and the Nasdaq. That's why they're all trillionaires over there. But when you look at the valuations of these companies, they've got valuations that don't make any sense. 10 times sales, amazing PEs, and lots of strange magical accounting. So if it's possible that the American markets will crash without totally killing the UK market, that's the hope. And what will crash is expensive stuff like the tech companies and the fashion companies, but the boring companies were in oil. I mean, Exxon's doubled in America over the last 9 months since I tipped it in on Forbes, and but it's still really cheap. It's like 1-time sales, not 10-time sales. And if you look at the English oil companies, they're valued at a lot less. I said this last week. There's a company called Philip Morris, Marlboro, I believe is one of their brands, and then there's IMB, Imperial Brands. They both do cigarettes. Yeah, but the value to the market cap of Marlboro, of Philip Morris, is 10 times what the value of one cigarette sale is for Imperial Brands in London. So cigarette for cigarette, Philip Morris is worth 5, 6, 8 times what a sale of one cigarette is to a company in the FTSE. So that, when the market comes down, that should protect the cheap cigarette. and it should hurt the expensive cigarette a lot more. So actually, if you were clever or brave or whatever, you would go long the cheap cigarette, short the expensive cigarette, and you would make money on them closing together. But I just prefer to be long. I'm not a hedger or a long shorter. I like cheap stocks. I think they've got promise.
So Clem, if we talk about the UK market, let's unlock the cheap stocks. You have mentioned quite a few in the oil and gas. You mentioned Imperial Brands, but let's go a little bit more.
Well, food and energy are good because there's going to be a pretty catastrophic shortage of food in the next year or two. And it won't be catastrophic for us, but a lot of people are going to die in developing countries. And that's a tragedy beyond a tragedy because of mad Mr. Putin. So, that is, and I wrote an article about this recently, which is to say, it sounds a bit wrong to say, I'm going to buy food producers and commodities because they're going to go up in price a lot. A lot of people are going to die because they won't be able to afford that food. It seems wrong to be involved in buying stuff that on the basis that it's going to go up. But actually, the way that markets work, people that interact with markets make sure that the price of a commodity or of a asset is actually as efficient as possible. Because when the price goes up, people make more of it, and then the price comes down. And making an efficient market makes the price of that commodity the lowest possible. And you have to have an efficient market to do that. So to actually minimize the real value of something, you have to, more people that play that game, the more speculators there are, the more traders there are, the more investors there are, the more likely not only is the price the lowest it could possibly be in the circumstance, but also that more will be produced in the future. And we have no better way to make efficient production of things than the interaction of free markets. So playing in a free market is actually benign, even though it seems a bit strange to be saying, well, a lot of people are going to die in Africa because the price of wheat's going to go up, so I'm going to buy wheat. Sounds like you're contributing to the high price, but actually not. You're actually contributing to the price being as low as it possibly can be in the circumstances, and it being lower in the future. There's a saying in the market which says the cure to high prices is high prices, and the cure to low prices is low prices. Because when prices are low, people stop making it and it gets short and the price goes up. And when the price goes up, everyone starts making it and the price comes down. And that's how markets work. So, long term, high prices cure high prices. Short, medium term, speculators and investors and traders make the price as low as it possibly can be. Make it the right price for the overall conditions that we find ourselves. And if you say, well, can't government step in and confiscate the grain from people that don't need it for junk food and send it to Africa? And it turns out it makes it worse.
Okay, so talking about food stocks, give us some.
Well, look, the palm oil is a big area, and I'm going to get the wrong country here, but I believe it's Indonesia. And there's a couple of companies there. Well, there's three companies. One I don't hold, which is MPF. And there's two others. One is RE dot. That's the ticker in London. I can't remember what it stands for now, but RE, I think they're called RE. RE dot is the ticker. And another one is Asian Plantations, AEP. I think, hold on, let me just type it into my machine to get the name right. But AEP, I'm pretty sure, is the ticker. And it's Anglo-Eastern Plantations. And they're big producers of palm oil, which is going to be replacing lots of sunflower oil that's not going to be made in Ukraine. And there's such a shortage and prices of palm oil have gone up so high that Indonesia banned the export for about 4 or 5 weeks so that people in Indonesia would have cooking oil. Yeah, because everybody's going, oh, got to replace sunflower oil. But there's two things intersecting. One of them I think is very controversial, but I think it's a thing. But there's several things. One, you've got mad Mr. Putin. Two, you've got supply chain issues, which is about stocks of things. So there's a shortage of fertilizers. That's Mr. Putin again. But you've also got the possibility of very poor yields in the coming few years because that plant food called CO2 there's not been so much emitted in the last 2 years. So there's not so much CO2 in the atmosphere. And CO2 is part of food. And I noticed the first year after COVID, in the countryside around here, that the crops were kind of lumpy bumpy. They weren't consistent. They were lumpy bumpy. And this year in Europe, everywhere I look, the planting is poor, very, very poor. The fields are very patchy. The crops don't look very good at all. And apparently the same's going on in America. Well, if there's a bad harvest in Europe and there's a bad harvest in America, whoa, that's going to be very, 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 very spicy.
Yeah. Well,
and so that's it. And of course, forget all that. It's going to be a good year. Everything's fine. Mr. Putin will
everybody
stop
is
his nonsense.
Yeah, exactly.
You've still got inflation.
Yeah.
To drive those prices up. So if you're on every, there's an intersection of 2 or 3 or 4 maybe things going on there. So if there isn't a CO2 issue with the crops, if there's still inflation, there's still Putin, there's still supply chain. And that's a hairy deal. It also feeds into energy because a lot of food is turned into energy. Biodiesel, for example. Yeah. Which I think is a very bad thing, but nonetheless, this is good. I think you don't want to turn food into energy. Energy is to make food, food is not to make energy. That's the wrong way around. Anyway, be that as it may. So energy, food, they're both caught in this intersection of supply chain, of Mr. Putin, mad Mr. Putin, and inflation. So even if Apple halves its share price, there'll still be real pressure on energy prices and real pressure on food prices and real pressure on food energy prices. And some people are doing very well investing in fertilizer companies. It's old hat, that one, but they have done well because this is an intersection, and then it all feeds into gold and precious metals. Because the price of fuel going up makes inflation, the price of food going up makes inflation, and that makes precious metals strong. So I've focused on big, boring companies with good dividends and strong businesses, and then food and energy and precious metals, and that seems to be quite a good balance. Riding this out.
Precious metals, just slowly, just quickly touching on them. We were kind of very bullish quite a few months ago, and it looks like they struggle to stay afloat.
They're struggling. They are struggling, but they're struggling up. And I think I've decided it's a get rich slow thing. It's going to be, it's like a market. You don't know when it's going to go berserk. You're pretty sure it's going to. You sit there and you go, why not today? I mean, this portfolio that I've got now that's really performing well, I built that 5-6 months ago because I saw this 6 months ago and nobody else did. So I'm sat there going, why isn't that happening? What have I got wrong here? Have I made a mistake? Why can't people see that? I mean, sugar is not moving, but there's going to be crop failure. Well, if you can't get calories from one thing, you get it from another. So everything is about calories. Yeah, I know about calories. I've got too many, but calories is the thing. And sugar is pure calories. Yeah, and if fuel goes up, biodiesel goes up, more sugar goes to biodiesel. So
it's so funny. We go back to the same. You need to have a balanced diet. You need to have a balanced portfolio. Today is all about health.
I'm not so sure about the balanced diet. I mean, I agree. Bread, cheese, wine, feeling fine.
Yeah.
I mean, that's a historical diet. Because back in the day, 300 years ago, with no refrigeration, it was, well, in Europe, it would be wine and bread and cheese and maybe a bit of butter. But, a lot of bread, a little bit of butter maybe, and a little bit of cheese maybe, and a little bit of red wine to make your water sterile. And that's all they ate. Mind you, there was only 4'6" tall as well, I suppose, and they only lived to 35.
And it was so funny. They were like conservating the meat. So they were killing animals and they were conservating them there wasn't a refrigerator. There was a place down in the ground that was colder than, upstairs.
Well, you'd smoke meat. You would turn various bits into sausage, which is salted.
Yeah.
So you'd pickle and you would smoke and you do all the preservative things like cheese. Why is cheese wrapped in paper? To keep the flies off. Why is cheese wrapped in wax? To keep the flies off. Why is cheese wrapped in straw? To keep the flies off. Why is it so and so forth? Why is it rolled in ashes? To keep the flies off. Because the only way you've got this cow that's producing vast quantities of milk, enough calories for your whole family, but you can't just drink milk. So you have to store the milk. So you store the milk in cheese, and you make butter as another way to keep it for a little bit longer.
Yeah.
And then you drink the milk, and then feed the way to the animals, to your pigs. And so you are constantly trying to preserve food. And you do that by smoking, by salting, by pickling, and all those other things. But they're all those clever foods that you eat is all a collection of ways of keeping your food for winter, because you get a lot in the summer. You get, well, probably not a lot of milk in the spring because they have to feed that to your young cows, and so on and so forth. But it's all an attempt to keep your stuff fresh. Well, I mean, you take your wheat, you turn it into flour, you turn it into bread, and you maybe don't store it. You can store it as flour, maybe not. But it's all a lot of old technology, basic technology, in the way that you avoid starvation, which was a big thing a couple of hundred years ago before the Industrial Revolution came along.
So Clem, just to wrap it up, how people can avoid stress during this very stressful market to make sure they don't end up dying rather than surviving? I mean,
well, I don't think anybody's died of stress in the market. They've lost their shirt.
Well, I heard of some people killing themselves after the Luna.
Oh, come on, you're getting as sad as Zak.
No, but really, some people...
everything's bad.
No.
I at the end of the day, the way to minimize your stress in investing, well, in the markets, is don't trade. It's inescapable that you're going to be stressed with that. That is a stress game, and it's a difficult game, and it's one that most people lose at. So you get stress, it ruins your day, and you lose. Don't do that. And if you're going to invest, well, that's much less stressful. If you invest in the way that's compatible with your psychology, that's the least stressful. If I do, I mean, I did a little trade on it was Petrofac, which is a strange oil facilities company, and it fell out of bed 2 days ago. Yeah. And I thought, that's not. I want some more of that, so I bought it pretty much at the low. It went up 3%. I sold out. Yeah. Well, if I had lost £200, I would have been the rest of the day. If one of my investments had gone down 5% and I'd lost 50,000, I'd go, yeah. So that I'm not stressed with my investments, that I am comfortable with what I've got. So I'm at ease with my portfolio. At now, the whole market's collapsing. I've got reasonably, I've got a big long position. And I'm minorly stressed because the world's falling to pieces in the markets in America. And there I am long like an idiot. But I've got my theory, my idea, and I'm comfortable with it. And therefore, I'm not totally pulling my hair out or selling, because it fits my psychology. So you should always invest with your psychology rather than, I mean, so many people do it for excitement. And the moment you do that, the market pays you in the coinage that you want to receive. And if you want excitement, it'll pay you in excitement, and it will charge you in money. And if you want to show off that I've got all these wonderful tech companies, I'm so clever. Yeah. Well, you'll get paid. You'll get paid by the market status, and that it will charge you in cash. And if you go into the market to make money, to make cash, they'll pay you in cash. Simple as that. So if you go into the market for no other reason than to make money from the investment, the market will pay you in cash. If you do it for entertainment, it will pay you entertainment, and you won't get any cash, and maybe negative cash. So the market will pay you X, and X is fixed. Yeah. But at the moment you want to get paid you're getting more fun, or some other payment in kind, a pick note, as they call it in VC land, payment in kind, you will make less money. And the more you get payment in kind, the less money you'll make. The more payment in kind you get, you might end up losing. And most people do end up losing. They buy the silly company that's got a good story because they're excited by the story. So they get paid in excitement and narrative. What does a book cost? And then they tell everybody, and they get pleasure from that. And that's all worked into the price. But the real price, which will come out in the end, is much less. So you will lose money. Yeah. Market pays you in the coin that you want to be paid in. Yeah. Yeah. So make sure you want to be paid in cash.
Yeah, and never go against the market.
Well, it's not going against. There is no market to go against. You see, it's not. You see, people have these mental images. I'm fighting the market. I'm beating Wall Street. Oh,
you can do that.
Nonsense. It's nonsense, but you shouldn't personify it. It's not a personification. It's not a war. Oh, the bulls are fighting the bear. It's not a war. It's none of those things. Yeah, it's a machine that weighs value, and short-term value is different from long-term value and medium-term value. And all it does is this machine. And if you understand the machine, you'll make money. And if you want to show off the machine, it'll cost you.
Yeah. Okay, Clem. I think this is very savvy word. And
that's why you're wearing black today. What happened?
Yeah, exactly. We didn't talk about crypto, but let's just leave it for.
Come on. I need you to say, what about crypto?
Well, I don't know what we can say more than just.
It's a fantastic opportunity in a few days, weeks time when it's down under 20.
Yeah.
That's the time. You see, it's all well and good when the market's gone up. It's going up. It's brilliant. It's marvelous. It's gone up. That's when you should be selling. Oh, have my crypto. You want it?
Yeah, but everybody was waiting for 100,000.
Yeah, well, you can wait for 1 million as well if you want to wait long enough.
Exactly.
Inflation will do it over the next century. But, in terms of you want to feel good when it's down, because that's going to be a good time for you to buy it. When it's up, it's time to go now.
I know.
So, the point is, the opportunity, you shouldn't feel sad when it's crashed. You should feel excited. Yeah, that's the time to buy. That's the great time.
Yeah, exactly. Many people feel sad because they already invested at the top and they are short of cash.
They should be sad at the top and happy at the bottom, not the other way around.
Exactly. So, okay. So that's just going to be a question. When do you sell? Are you going like, okay, I'm making 50%, I'm selling. So what are your ratio to kind of, do you have a ratio about selling, or is it about hearing about different kind of variables and then say, okay.
In stocks, I used to sell at 30% profit automatically.
Okay, that's good.
I used to, but over time, I realized that when it gets to 30%, you look at it and go, can it go more? Will it go more? Is there possibilities of going more? And I will sell it if it does this. So, you can write it down. You can put a stop loss in on your account. Yeah. I wouldn't do that. But you keep examining it. So rather than say at 30% I'll automatically sell, you say at 30% I'm now going to start watching this thing and sweating. Yeah, and it goes up and goes 60%. Oh, okay. And you're in clinging on mode then. In your mind, you sold, but you've still got it, and you're waiting for the time. And you go, yeah, that's enough. Goodbye. Yeah. Now with crypto, because it's so much more volatile, the sellout point is so much broader. And in the same way as stop loss has to be wider, the actual band is much wider because of the volatility.
Yeah.
The best way to do it is there's several ways to do it. One way is if you wake up at 3 a.m. in the morning, you want to check the price, sell.
You sell, exactly.
Yeah, because you can't wake up at 3 in the morning. It's not good for your health. And stocks and opportunities are like buses. They come by every now and again, and then you jump on them. And there's 2,000 British stocks, there's 20,000 American stocks. There's loads of cryptos, and there's only one dog, and there's only one pack, and another one will come by. Yeah. So if you're going to make money because you're smart, not because you're lucky, there's another one coming by, and you can say, this is too much. I'm waking up at 3 a.m. on this set. The other way to do it is you go, well, if I ever make X% on anything, I'm always going to sell. Just going to sell 500%, 200%, 50%, whatever it is. It's a flag. It goes bing, 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 bing. And then as you get more better at it, you can say, well, it's a rule to look at it, to consider selling and think about selling and think about being wrong and thinking about being right and make a judgment call at that point. And the other way is to let the thing run until it goes over the top. So it's going like that. See, it goes like that with me, and I just go bang, goodbye, bye. And half the time that's exactly right, and half the time it's exactly wrong. You can just let it go up and then roll over the top and then get out. But theory tells you it makes no difference. Yeah. It makes no difference at all. So the thing is, if you look at it and you go, oh, maybe I should sell, you should sell.
Yeah.
Yeah, that's base camp one.
Yeah.
And then anything more than that, you should, you know, bear it in mind. You can always get the next one. Exactly. Oh, I've sold it at half.
I think this is very important to remember. It's not, you know, you can always get the next one. I like that.
Don't ride it all the way up and all the way down.
Yeah, because you can get burned in the middle.
Leave some. And the other way, which is a way that I don't normally think about doing, and I always remember someone telling me this, and I always remember, oh yeah, that's the way. It's just sell half.
Yeah.
You start to sweat. You've made 10%. It doesn't matter. And you start to sweat. Ooh. So you sell half of it. Have you stopped sweating? Yeah, I don't care now. So then you can see what happens.
Yeah.
Because you've lowered your risk. You've taken some of your profit. That's banked, and now your risk is lower. And how do you feel? I want to sell the rest of it. Oh, bang, gone.
Yeah.
Or I'm going to hold it and see what happens next. So you can always de-risk, as a friend of ours always said. But you know, a top slice is what brokers would say. You just sell half and see how you feel. But ultimately, you know, you got in with the right idea, and you sold and taken your profit. Now, if it's not all of it, it doesn't matter, because it's the getting in that's important. Getting out, well, that's the other end of it. But getting in cheap, that is the important part, because there's not much downside and there's a lot of upside. Getting in, you know, buy expensive stocks that are going to be more expensive.
Yeah, exactly.
I mean, it doesn't matter that they're highly valued or highly priced. Doesn't make them expensive. Yeah, price is not expensive. It's intrinsically the prospects and the value of that company as it sits there right then. And you know, if you get in low, it doesn't matter what happens next so much, because when it goes up, then starts thrashing around. You caught it down there, and I make 350, and that one makes 250. If you're thinking like that, you're thinking wrong. You should be singing. You should be, you know, going to church on Sunday and thanking the Lord if you got 250% profit, even if you had 600%.
Yeah.
So, you know, the point is that it's good to have a plan, and then you can plug in your own rules, and then you execute them. And when rules seem to not work or they're not suitable, you can replace them with others. So you build up your bag of tricks, your bag of tools, and then away you go, and then you'll be all right.
Yeah, I think it is kind of a job to be.
Job. It's exactly a job.
Yeah, because
it's a part-time job.
You need a plan. And well, anyway, those are like places where I really would like to have more questions from our viewers to kind of like you know, share your insight and then see if there is a way that we can make them thinking about it, how to do things.
You can never learn too much. Exactly. And you never know much. You just need to be a little bit more right than wrong.
Yeah.
But that's pretty tough. That is pretty tough. And the best way is to have your rules and realize that, you know, going with the crowd is probably not the way to go.
Yeah. And also don't get too stressed. I think that's the important
part. If you're getting too stressed, you're doing it wrong.
Exactly. That's you don't want to die young.
Well, you won't die young. You'll just lose all your money because you're doing it wrong. You're stressed because you're doing it wrong. And if you do it wrong, you lose your money. And then, so that's not a game that's going to last very long, because when people lose money in the markets, they tend to lose it fast because they're doing it wrong. They're doing too much leverage. You know, they're buying stuff for the wrong reasons at the wrong time. They're following the herd. You know, it's a very short life traders.
Yeah,
the world's full of them. I mean, I'm sure for every 10 people that's on here, 8 people lost their shirt by you know, trading and doing all that crazy stuff. And you know, of the people that are investors, I bet there's hardly anybody that's actually lost their shirt. So, you know, investing is not trading.
Yeah, exactly. Okay. Well, let's bring this conversation back next week, and then we can talk more about crypto. That's you know, hopefully we have got.
It's coming, boys and girls. The loads are coming.
I just got a notification. Ethereum is down 5.7%. Okay, in the last 6 hours. Great. I think that's a fantastic way to end the show, and then we can
to end the world. No, I mean it's the cheap is coming in crypto. Yeah. So if you love crypto, cheap is coming, and then you're going to load up, and then you know, wait a couple of years, and then when it explodes, you'll be the cleverest boy in town.
Exactly. So wait for
the opportunity.
Okay, Clem.
Somewhere between the two.
Okay, Clem, thank you so much. And